Happy Aloha Friday, everyone. The market ended the week on a very, very positive note, and in fact, the past 2 days have been very positive. Let's see, do I have the FinViz thing up? I sure do, thank goodness, because I just like looking at these charts because it goes ahead and shows you all three major market indexes. I wish I had the Russell 2000 up here also, but it gives you a complete snapshot, and as you can see, all three indexes put in the exact same pattern. You rarely get to see this kind of mirror image trading, but today, if you're looking for a day where all of the indexes matched each other perfectly, for the NASDAQ, Dow, and S&P 500. And even if you do the Russell 2000 intraday, it would look like that. It's just that the Russell 2000 finished down today as it was actually one of our strongest indexes on the way up. So it's no surprising as we kind of consolidate gains here that it's one of the weaker ones. But it's just that's impressive to look at just from my own personal experience. I don't keep a record of how many times all three indexes behave exactly the exact same way down to the 1 and 5 minute level, but it does not happen often. So for a nerd like me that loves numbers and statistics, this is quite an interesting observation. So with that being said, we look at the NASDAQ here, see it was up 0.22%. Volume was average, lower than the day before, and still technically below average. But we're consolidating gains here, and we're doing it in a nice flat way. For the week, the NASDAQ was still up 0.71%, so it is wedging higher slightly, but overall, just a really nice setup that we have here. There are no sellers in the market right now, and that's good. However, nothing says that they can't show up at any time, so always be on the lookout. But the bottom line, after the two sessions before Thursday and Friday, where we opened at the highs and closed at the lows, we basically were able to do the opposite to close out the week, opening near the lows and or opening weak, touching the lows, and then rallying intraday, and we did that back-to-back days. So very good for the NASDAQ. The Russell 2000, like I said, is a weaker one, down 0.54% today. However, it had one of the more dramatic, I guess, uptrends overall from the November lows, and from the June lows it was quite steep, and as you can see, the 200-day moving average is really far away, so there's a long way to fall before we just get to about the 200-day average of our market movement. So we are overshooting to the upside here, but consolidation would be good, and that's what we have. The best thing about right now is that the Russell 2000 might have closed down, but as you can see, it closed at the exact high of the day, 1048.51. So very, very good to see. The S&P 500, Dow Jones Industrial Average, and New York Stock Exchange, they're nice, and as you can see here, there's a lot of beautiful intraday tails. Look at the Dow Jones the past three sessions. Big intraday tails, the S&P 500. Two intraday tails the past 2 days, with the index closing near the high day, only off 20 cents today, and only off about 69 cents on the 25th on Thursday. So not bad at all. Some very, very strong action by the indexes as we try to consolidate the gains. But it wouldn't surprise me if we just keep on running up to new highs, because I mean, look at the big caps like Starbucks. Look at that thing hit new highs. Look at Trip hit new highs. Q-Core going for new highs. Amazon hitting new highs. Krispy Kreme donut shaking me out, hitting new highs. Facebook, even though it's pulling back, you saw what it did yesterday, hitting new short-term highs. And I mean, hopefully this will only set up a consolidation pattern, give me either a breakout buy point, or I can set buy stops here, let's say at 34.89, or you could even do, let's see, 34.36, 34.37 as a buy stop if we move sideways for a few days and start to consolidate with a handle. But the bottom line is that we have a lot of big cap stocks ripping, and also a lot of IPO stocks looking great. And you can see after Zoom gapped up yesterday, too far for a buyable gap up, pulled back to more within a safe range around the 31 area, and has just zoomed higher, taking out the rest of what it did since the open of the day before on Thursday. And as you can see, a very, very, very bullish situation here on very heavy volume, with XOOM Zoom hitting new highs. So some very, very, very bullish action out there in the market. Whoa, what's going on there? And you can see ACT, WCRX, which is going to be what ACT is, combining strong moves. You got Sohu, a Chinese stock. It's kind of a wedging move higher. As you can see here on an arithmetic chart, it's not necessarily a flat base. It's completely wedging higher here off the June lows, but it is breaking out on above average volume. That's strong. And I mean, there's even, a little speculative stock today that gave a nice signal here, but with it closing at 310, yeah, very strong signal, strong volume. BOP, I would have liked to have seen zoom to max green BOP if I was going to take a chance on this thin stock. But as you can see, it only averages about 65,000 shares a day, so I'm not that interested in the pattern to want to buy it when it has that many shares. And you can see this is its chart pattern right here, and as you can see, it isn't as smooth as something like VVTV. So as you can see, you're dealing with something different whenever you're talking about a nice stock that's low price. You can see VVTV, low price stock, but averages a lot of shares, more tight chart pattern. CNIT, just a complete opposite, kind of a loose chart pattern here. So unless BOP was max green and volume was huge, I'm not interested. And then that goes back to SOHU. I wanted the base to be a little bit more flat. Unless BOP surge or volume surge was bigger, this kind of signal isn't of interest to me. And on that note, we don't have any new longs. We don't have any new shorts. We only have one partial sell, and that's in INVN. INVN is a partial sell because without producing any gains, it is now closing below the 20-day moving average on above average volume. That's automatically a 25% sell signal. Also, if you would have used the low a day, or as the open, excuse me, of the signal date of 1552, and with it closing at 1550, that's also a sell signal, and then that might increase to 50%. However, I was using, because of the big difference between the open of 1552 and the low day of 15, the day before's low a day, 1540, became my first cut loss level, with the low of 15 of the signal date being my final cut loss level. With it closing at 1550, neither one of those is violated, so no sells based on that decision. But like I said, I always use the trailing 20-day moving average as a signal to take some of my position off if it doesn't move right away, and that's what INVN is doing. So, taking partial sells off of then. And the reason why I'm being careful here, is because, there's still some blowups. We don't have any new longs for the third day in a row. There is a good reason for that. This market is very extended from the 200-day moving average, and most stocks that are breaking out from wedging, already trending higher patterns with relative strength lines that are not confirming the price move. And then on top of that, most of the stocks in my scans are already extended as can be. Like, you're going to buy Starbucks up here or Trip up here? You're going to buy Baidu up here or Facebook up here? No, they're extended. They're going to need to consolidate before I can get long. And that's why we've had no new long signals, and that's why the closest ones like Sohu and CNIT are not taken, because they are also, the handles aren't drifting lower, they're wedging higher from the lows, which gives it cup-based pattern breakouts, but still it's just not symmetrical or green enough or has the right volume patterns within the price formation for me to get long. So the past three sessions, that's why no new longs, and it's not really a big deal. Is the past three sessions, the market's up 0.95% on the NASDAQ, down 0.35% on the Russell 2000. We're basically consolidating here. And I mean, and like I said, the dangers, SWI, yes, SWI is in a downtrend, but still a 22% haircut, that's pretty harsh. EXPE wasn't in a downtrend. What if you were long with a 5200-day moving average breakout? Boom, 27% haircut. And then on another speculative stock, this speculative stock was looking okay, not great, but I wouldn't blame you if you got long because you believed in let's say that you believed in this company. I wouldn't say, well, hey, you got a poor reward risk ratio. Well, anytime you buy stock before earnings, it's a poor reward risk ratio because HTCH can happen. And as long as I keep seeing that out there, there's no reason for me to be aggressive on the long side when everything's extended. Patience pays off in the market. So we'll go ahead and wait to see if the market can't continue to consolidate the gains. Then if it breaks out higher and we got some fresh breakouts from consolidation patterns, I'll be more than happy to get long, but as of right now, a lot of things are extended, and I would like to see things calm down. Also, to end it, POWR is on a partial sell watch with the 50-day moving average come up, and CSU, remember the 200-day moving average, I will never, ever be long a stock in an uptrend once it gets below the 200-day moving average. I will be long stocks that are not above the 200-day moving average if the signal comes with the stock below the 200-day moving average. So with Caterpillar, for instance, it was only above the 200-day moving average twice, but yet I'm still long. This is the only time it's not relevant. But if I buy a stock that's in an uptrend and the move happens above the 200-day moving average, you can be 100% sure I will not be long that stock if it ever trades below the 200-day moving average. It's just not something you will ever see. I've never held a stock once it breaks a 200-day moving average if I went long with the price above the 200-day moving average. And I recommend any new trader apply that to their methodology. Have a great weekend, everyone.